And the April jobs report is out today from the Commerce Department's Bureau of Labor Statistics. The unemployment rate dropped to 3.9%. That's the lowest rate since December of 2000 and a tenth of a percent from the March rate of 4%. There were 164,000 jobs created in April, and there's no question we have a strong labor market. But while the rate is really low, the number of 164,000 isn't all that great, although it certainly is up from 135,000 in March. And here to help us dig deeper into the numbers is Jeffrey Smalls, the president of Arbor Financial, and conservative TV and radio host Steve Malzberg. Thank you both for being here. Jeffrey, what's your top-end opinion on these numbers?
Well, I think they're skewed. I mean, we've had about 410,000 people actually leave the workforce or retire or drop out altogether and stop looking for work. And that's the real reason we're down from 4.1 down to 3.9, even though there is 6 million jobs outstanding, Bart.
Right. There's still a lot of folks out there. There's the U6 level, the unemployment rate also. Hey, Steve, let's get your top line opinion on what's been going on first.
Well, I think if you look at it over 3 months, you have an average of 205,000 jobs. I also think you have, once again, record low black unemployment. You have tied for the record low of Hispanic unemployment at 6.6%. 4.6%. Black is 6.6%. Even adult women went down to 3.5%. So there's a lot of good in the numbers. I think that workforce participation does need to pick up, and I think that that is problematic. We did lose over 400,000 people, as my counterpart alluded to. But I think overall, you have to be satisfied with this as we move along. And by the way, I know we'll get to wages. I think pretty much the wage growth kind of tempered down inflation fears, and that seems to have done well for the markets today.
Absolutely. I do want to get to wages in a minute, but I did want to comment, and you're right about, Steve, about the black unemployment, and there's been a lot of discussion about that because President Trump has been taking a lot of credit for that, and I don't want to go back too far, but that's been increasing. But I did want to note something for all the boom busters out there. There's a new study out. I was just reading it before we went to air from the National Urban League, and one of the interesting things in it was that said that of the 46% of blacks are homeowners, 46%, while 72% of whites are homeowners. And so there's a couple of other data points in that study, which everything isn't just roses for black Americans. Jeffrey, what about wage growth and hours worked? What are we seeing in these numbers?
Well, we're at 34.5 hours a week. We've had wage growth of 4 cents month over month, or 2.6% year over year. So that's hardly enough wage growth to really facilitate inflation and really justify the Fed to increase rates. The markets are really taking this, though, as a positive today. And I think we're going to see the markets get really unsure of themselves when the Fed starts talking about raising rates again next month.
And Jeffrey, what about the different sectors? You know, we know that the tech sector has been growing, construction has been growing. I don't know if you've looked at that.
I have. You know, infrastructure came out down today. And so some of those infrastructure stocks, those construction stocks, are taking a pretty good hit. But when we're in a rising rate environment, and it appears that inflation is going to creep up very slowly, as we've seen energy go up 6.5% to 7% this year, and I expect unemployment to continue to decline. I see us going down to 3.5%, which is really going to give the Fed the fuel to keep raising interest rates. And so if you're an investor in the market, you want to focus on financials and banks at this stage.
We're gonna come back and look at 3.5. I hope you're right on that, Jeffrey. And Steve, any sectors that you know, usually we see some that add jobs, and sometimes there are a few that don't do as well. How about those that maybe lost jobs or stayed sort of the same?
Well, I do want to point out, if I may, manufacturing, which I think is key, that gained in the 20s about 25,000. And since October of 2016, and we know what happened a month later, not to get political, but since that time, we've had significant growth in manufacturing jobs, up about 240,000. And this year, it's grown significantly as well. Also, mining did pick up some jobs as well, and that's something else that has picked up since 2016. So those are two key sectors that I think when it came to Donald Trump's promises, he did promise to make a mark on, and he has. Basically, healthcare also picked up, and of course the service industries picked up, but nothing too significant, nothing to write home about, and nothing dropped that much either.
And Steve, we spoke a week ago about those 14 states that saw in the last year the record low unemployment rates in nearly 10 years. That trend, it looks like, continues when I was looking at the BLS report, so that's good news. But I do want to ask you both the same question. And Steve, you sort of said if you look at the first quarter, actually the first 4 months of the year, that it's pretty good. And I'd agree. I don't want to poo-poo what's been going on. But these numbers aren't, 200, 300,000 like we've become used to in the last year. And I'm curious if both of you think that that is a bad trend. Jeffrey, you think we'll get down to 3.5. But what does this mean for the economy? Steve, let's start with you. What do you think it means for the economy for the rest of 2018?
Well, I think you're going to see job growth accelerate as we move along with the rest of the year. I think as the unemployment rate goes down even further, which not many of us could have anticipated, 4% is considered full employment. I think you're going to see pressure on wages, and I think you will see wages increase as the unemployment number goes down. A survey just completed, 9 out of 10 small business owners said they can't find enough qualified people to take the jobs that they have to offer. So I think you're going to find employment numbers going up as the year progresses, and I think wages will reflect upward as well.
Great point. And Jeffrey, speaking of wages, when we saw those go up, I think it was the February numbers. Boy, the markets took a big tumble, as you may remember. They rebounded, but that was one of the beginning to that volatile time period we had starting in the beginning of March. How do you see the rest of this year playing out, Jeffrey?
Well, I think the market is really tentative right now in terms of the economy. I mean, we saw mortgage applications decline 2.5%. As they increase rates, it's going to put more pressure on the earnings, profits, and the cost of debt is going to go up. And so that's going to put a squeeze on the economy. As we just saw, annualized GDP right now is around 2.3% as per the last report for this year. That's not a screaming, growing economy. That combined with lots of people, hundreds of thousands of people leaving the workforce, will give us the illusion that the unemployment rate is actually increasing, because all we really did, Bart, is increase 164,000 jobs as per this morning. Most economists were expecting 197,000 in the report. So this is the second month in a row that we've underperformed in terms of what they predicted. And so, I hope that number changes. But right now, as the 3.9% goes, we really are kind of being padded by people leaving the workforce more so than people actually being hired. Even though I believe that those 6 million jobs out there, they'll find workers. There's people that if they want to find work, it's there.
Can I give a wild
what
card?
What a great discussion.
Word?
Thank you. Oh, go right ahead, Steve.
I was just going to say China. Let's see what happens with these negotiations with China. That could blow everything up one way or another.
Yeah, Steve Mnuchin, the Treasury Secretary, is over there now with the delegation. We'll have to keep an eye on that. Steve Malzberg and Jeffrey Smalls, thank you so much for your time. Appreciate it. Have a great weekend.
Thank you.